lots of people consider Goldman Sachs to be the trailblazer, along with J.P. Morgan, I suppose, for investment banking. Yep. What did we learn today?
It was a pretty mixed quarter. Very high litigation expense. It was something that we weren't looking for. I don't think the market was, and so that impacted the headline number. If you take out the litigation, which was related to mortgages, they did beat, so that was good news. But I think if you peel back the onion a little bit, it was still kind of a mixed quarter. Very strong equity sales and trading. That was consistent with what we saw from all the big banks. Very strong investment banking results, so that was good news also. Their fixed income trading was a little bit softer than we were looking for. It was down about 35% year over year. So that was
more than J.P. Morgan, more than Bank of America.
Exactly. So I think that was the one area that stood out. And so trying to dig into that, I suspect June was probably a tough month for them with all the market volatility. Goldman's also a little bit more levered to some of the micro products like credit and mortgages, and those are the areas that were softer in the quarter. So I think it might have been a little bit of product mix this quarter than Goldman had a bigger issue.
Why does that business for Goldman Sachs, fixed income commodities and currencies, appear to be less resilient now than it used to be? It seemed for a long period of time, even during the crisis, quarter in, quarter out, Goldman always had one of the best numbers, which is to say one of the best revenue lines for that business on Wall Street. And now it's all over the shop.
Yeah, it's a great question. I mean, every quarter there's kind of a different story. And this quarter you had still a pretty good story in the Treasury market and rates. And so the bigger banks with more exposure there really outperformed. And then I think that credit has been a softer area for the past couple of quarters, and Goldman just happens to have a little bit more exposure there. So I do think it's mixed. If you take a step back, Goldman's gaining market share, I think, in a lot of products. Goldman is still there with their balance sheet, and they're one of the few firms that I think is in the market every day. And so longer term, they're going to gain market share, but you do have some of that quarter-to-quarter volatility based on
one of the things
story.
In the Goldman report that often gets overlooked is asset management.
Sure.
They had a great quarter in asset management. Can we extrapolate anything from that as far as Goldman itself is concerned, or perhaps what we might hear from Morgan Stanley on Monday?
Sure. I think Goldman is really focused on growing their asset management business. It's capital light. It's steady, it's fee-based, and so they understand the importance of driving more revenues into that business. And so it was a good story. This quarter, the benefit was incentive income, so that's kind of tied to performance and can be a little bit lumpy. But I think the read-through is, we had a choppy market in the second quarter, so a lot of firms probably are not going to see big asset AUM growth. But for Morgan Stanley, I'd suspect kind of the same. We'll have a pretty solid quarter, and then wealth management should also have a good result. And Morgan Stanley's wealth management business is kind of its own unique animal.
I have a question for you. Not long ago, I asked Larry Fink, CEO of BlackRock, who he considers to be his biggest competitors. And I thought he was going to say PIMCO. I was sort of fishing for PIMCO.
Sure.
And he said, no, actually, I think of J.P. Morgan Asset Management and Goldman Sachs Asset Management as my biggest competitors. I think he's thinking more institutional than retail here, clearly. What does that imply as far as the future of the relationship between a buy-side firm, an exclusively buy-side firm like BlackRock, and the sell-side functions that J.P. Morgan and Goldman Sachs provided, while also running massive asset management divisions?
Sure. I mean, it's a interesting conversation. I think that J.P. Morgan, all the big banks really have put a big emphasis on expanding the asset management platforms. And again, coming back to that theme of these are capital light, very recurring businesses that keep the lights on when trading is volatile and the ROEs are below where you'd like to see. So, longer term, I think asset managers are all kind of evolving into a similar box where you have the alternative asset managers like Blackstone and KKR and the big institutional money managers that are more long-only products. They're all kind of going in the same direction. And I think the big banks understand the importance of being there.
Devin, thank you very much. Great seeing you. Devin Ryan of JMP Securities. He is a managing director and banking analyst here for Goldman Day.